More and more people are having their homes sold from beneath them as power of sales and foreclosures as the housing market continues to crash in Canada. So let's start off with some of the factors that are going to be impacting the housing market and just making it go down even more. And one of those factors is obviously rents. But first of all, let's start off with some losses that have happened and some stories as well of what's going on with these home buyers and how they're now turning into home sellers and taking huge losses. So Shazzy wrote on X, this condo hit the market in 2023 at $819,000 and had an offer within days. The seller pushed for a minor price bump and the buyer walked away. 8 failed listings, 5 price drops, 1 desperate renovation. 434 days later, it sold for $655,000. And it's actually selling now for less than in 2019. So just think, in 2019 they bought this for $725,000 and now it's just sold for $655,000 in 2025. 6 years, and they've lost probably 50% of that to inflation at a low guess of where inflation has been. So it's absolutely insane. People are being absolutely destroyed by this. So you can take a look at this one as well. So this is Vaughan. Vaughan at one point was the most desirable place to live in the GTA. And then you've got a $500,000 power of sale. Another power of sale. We're seeing more and more distress in the market. You know, John Flynn's posted statistics on the power of sales, which are just rising and rising each month. And this is just going to continue because the economic environment is just getting worse and worse, and people are getting more fearful about losing their jobs, and a lot of people are losing their jobs. And if you're actually in the labor market right now, you'd know how bad it is. People are applying for thousands of jobs, as I posted in the last video, and they're getting nothing back.
So far, I have thrown out over 1,000 applications, and I'm not joking.
Really alarming stuff. Brampton blowout. So this was bought for $1.7 million. They leased out the basement for $3,000. They tried to unload it last year, but no takers. The lenders just stepped in and sold it out from underneath them for almost $300,000 less than what they actually bought it for. So another loss and another power of sale, which really shows that distress. And you've really got to think, the market, the housing market in places like Toronto and the surrounding areas have been highly speculative and based off a lot of speculators and investors in that market. And what's it going to take for these speculators and investors to come back when you take a look at rents declining? So yeah, rents are declining and you've got property taxes that are going up. You've got expenses that are going up with all these tariffs and everything that's going on like that. Obviously for these big buildings, a lot of the parts and a lot of the things that go into them are from the United States. So what's that going to really mean with additional taxes that have been slapped onto them? The prices of condo fees are just going higher and higher and higher. So Olivia Chow's new budget features a 6.9% tax hike to pay for bolstered services in Toronto. But you're going to see this across the board. And we've just saw rents go down again. So a new report says the national average asking rent in March was $2,119, marking the 6th straight month of declines in Canada. And get this, the report said average asking rents in Canada are still 17.8% higher than they were 5 years ago when the pandemic hit in March 2020. Now think about that for a second, because obviously you've had 5 years of inflation way higher than 17.9% over that entire period. You know, at a very optimistic guess, you would have to call it like 40%, 30% even. So you are way, way negative in real terms for rents in Canada. And I've said this before. I said this a long time ago when rents were skyrocketing and everybody was thinking rents are just going to go up forever. And the same thing happened in Calgary after that. And the same hysteria and mania that was induced by speculators and investors thinking that rents are just going going to go forever. Rents can go up and diverge from incomes, but they're always going to crash back down to incomes because you're robbing Peter to pay Paul, essentially. So Ontario recorded the steepest rent declines, with combined apartment and condo rents falling 3.5% to an average of $2,327, followed by Quebec's 2.5% decrease to $1,949. So these are big decreases in rents that we're seeing right now. And obviously with the tax hikes and everything else that's going on, it doesn't bode well for the real estate market. And then the Globe and Mail put out this article, which I thought was pretty good, because the real crash to fear in the trade war is housing, not stocks. And when you think about how dependent the economy is on housing, how many small businesses depend on housing for work, it really is going to be a self-reinforcing doom loop that we're already starting to see with construction sites that are stalling everywhere. If you really want to gauge the wealth of Canadians, watch the housing market. In many parts of the country, it has been stunned into inaction. Sales are down sharply and prices are flat or edging lower. The housing industry spin is that sales are depressed only by uncertainty and will pop up like toast when the trade war is settled. Not talked about is the potential for a recession that threatens home prices. And I'm glad that they're bringing this up because, you know, that is one thing that I've been talking about for years here. And if you look at what's going on with consumer confidence, obviously it did recover after 2020, but it was only at pre-pandemic levels for 2021 during that absolute insane mania. You've got to remember the government printed unprecedented stimulus into the economy. There was all kinds of mortgage deferrals that were going on back then. People weren't paying their bills, and essentially they were out there spending the money instead of saving it as well, which is kind of funny actually, because now you look at savings and they're actually on the increase here. And the thing is, you might think, well, that's great, people are saving for a rainy day, but the reality is that they're not spending it. So it just means the economy gets actually worse, because the economy is based off consumption mostly in Canada, the United States, and many developed countries. So when you've got lots of people saving money, although that's a good thing in a way because they're preparing for those bad times, it also just makes the downturn even worse, which is exactly what you're going to see. So the health of the stock and housing markets matter to all of us because of the wealth effect, a term that describes how people are influenced to spend by the state of their financial assets. The economy is already weakening. What it does not need at this point is a big pullback in consumer spending. And that's already happening. You know, let's be honest about this. This is already happening. Consumer spending is already going down at a rapid rate because of what we're seeing. The erosion of sentiment is not just apparent in consumers, it's also apparent in businesses as well, where you're seeing that happen too. And you're also seeing people starting to lowball housing. Now, this is really something that you would expect to happen in the fear stage, and I think we're on the edge of that. Not yet. I was talking to John Flynn yesterday, and he was basically saying that he doesn't think we're in that part of the cycle yet, because you're really just not seeing sellers accept those lowball offers. And even in this article, which I'll link below, you see the same patterns playing out of sellers still in denial. We've been in denial in this real estate implosion now for 3 years. So it just goes to show how long this cycle may last. It is really hard to say at this point. And what's really interesting is they open this up with the Toronto area real estate market is increasingly drawing comparisons to the 1990s. And me, back in 2022, as many of you will know on this channel, when the yield curve inverted as bad as it did in the 1990s, I was saying that this housing market crash, this housing market bubble imploding could be as bad as them because it was so big. And then you've got the yield curve that is the most inverted it's ever been since the 1990s. So could we be heading to default rates of that magnitude? And you didn't have to be anybody smart or a rocket scientist. I mean, I'm just a schmuck on YouTube. And basically, you could just see it because it was so evident out there. The yield curve is practically never wrong about these things. And when you look at Canada's economy, it's mostly based off housing and government, unfortunately. So you can see what they say here here is that buyers haven't vanished this spring, but many are hunkering down amidst the trade war, stock market gyrations, and the impending federal election. Sellers, meanwhile, are continuing to list. It also says in more difficult circumstances, some sellers are struggling to break even after purchasing in 2021 and 2022. And obviously we know this well because we've covered many of those losses on this channel. And this guy, he points out that people who purchased 20 years ago are still doing extremely well, but someone who purchased in 2021, paid land transfer tax, and then put money into renovations is likely selling at a loss today. And that's why so many people are able to leave Canada. So many people are selling because they built up this wealth over the course of a couple of decades, and now they're realizing and seeing quite clearly how the end is in for Canadian real estate. And even if you think that it's going to go up in nominal terms, in real terms, I don't think it's going to be going up in price for a long time. And that's what really matters. It's not nominal prices, because that's not an accurate representation of purchasing power, which is at the end of the day what everybody wants. They want to increase their purchasing power. And you can basically see what happened in March here. So real estate sales in the GTA dipped 2.4%. The slip follows a 28.5% slide in February from January. And on the supply side, new listings were up nearly 10% in March from February. Combined with the decrease in sales, active listings edged up by 1.6% during the month to mark a 12th consecutive month gain. Sales in the GTA in March fell 23.6% from March 2024. So it's showing you just how depressed the real estate market is here. The amount of active listings, that's up 88.3% in March compared with the same month last year. And again, another stark warning in this article, that's the highest level for March since 2009, when Mark Carney's claiming that Canada dodged and avoided a 2008 recession. Canada got hit by a 2008 recession. It just wasn't as bad because it bet big on the housing market, and the housing market bubble just was not on the scale of the United States at that time. And then another very interesting statistic that we're now seeing turning, and I said that we should watch this like a hawk because it's incredibly important, because a lot of businesses in Canada, they pay down their existing debt by using new debt, by originating new debt. And I know that sounds like some sort of pyramid scheme, but it is unfortunately the way it works. And the same thing happens with consumers as well. But what you're seeing is you've had 2 months now of loans to the private sector that have been in decline after it pretty much stalled out last year. But this is actually the longest time that loans to the private sector have stalled since 2020. So you know how bad the economy is. If the loans to the private sector are stalling out, that basically means the banks, they don't want to lend. They're getting way more risk off at this point, and they just don't want to lend right now. And we're seeing the same thing, that they're scrutinizing people more when they're going in to try and get a mortgage. And this is incredibly interesting stuff, because when people think of a real estate bubble collapsing, they expect that when the prices are low and you're in that fear cycle, that they'll just be able to step in and buy and get a mortgage easily. And obviously, as somebody who's seen what happened in the UK in 2008 and how banks tightened up lending standards there, I know that is not the case, and that can actually go on for 5-6 years after that crisis, where you've still got lending conditions that are really tight because the banks, they don't want to get involved because real estate turned so bad on them the last time. So anyway, it's going to be incredibly interesting to see what happens here, guys. I want to thank you so much for watching this video. If you've enjoyed this video, I'd highly recommend that you check out that video there. And then if you're looking for a VPN and also want to protect your privacy and help out the channel, then please go to expressvpn.com/marketmania. I will see you in the next one. Take care, guys.